Alright guys, welcome to Asia Forex Trading System and Strategies. My name is Ezekiel. I'll be touching on the follow-up on the chart that I've posted. That is the dollar yen. Alright, as you can see on the chart that I posted that I made an entry via the pin bar over here. Alright, so what we can see from here, and why did I place the pin bar? Alright, let's zoom to the daily chart instead of the 4-hour chart. Alright, so what we can see over here is a pin bar being formed, and this is the same pin bar that I highlighted in the 4-hour chart. Okay, the reason why I entered here. Okay, firstly, let me redraw this fib retracement in case you guys do not know how to draw it. Okay, so I click on the fib retracement. I click the high point, the swing high, to the swing low. Alright, so from the swing high to the swing low, we can see that it had retraced right up to the 61.8 level. As most of you guys would know, the 61.8, the 50 and the 38.2 are the most important levels in the Fibonacci retracement. So this USD yen has already reached the 61.8 and has a stretching pin bar right up here. Alright, so this is one factor which we will go in, but that is not all. Okay, we need more confluence to confirm our entry. Alright, so in our trading system, which I have told you guys, I put 3 moving averages: the 365, the 150. This is 150, and this is the 200. Alright, these are the moving averages that I believe should be in most traders' chart, as they are all important points that should be placed in it. So this pin bar down here actually did touch the 200 moving average, and usually these moving averages will act as a support, which we can see somewhere over here. Alright, so this is one confluence. The next confluence will be the support and resistance. Alright, so what we can see, which is this line that I draw over here, which I call the price pivot. Alright, from what we backtrace down here, okay, we can see down some support down here, support here, resistance here, resistance here. Alright, and follow on by some support here and support here. Alright, and next is the resistance here. So I would say this support zone, which I call the price pivot, is a pretty substantial one. Okay, so this is another point. The next point will be this red line that I drew over here. This is the trend line which I drew way back. Let me zoom back a bit and let's see. Okay, so as you can see, this is a downtrending trend which goes way back. Let me see how far it goes. Alright, even further up to the August 2008. So I drew this downtrend touching all the high points. Let me see how it even goes all the way back, all the way up to June 2007. So I should say this is a very strong trending downtrend, and so far this trend line is a very strong and substantial one. As you can see, it hits most major high points over here. Okay, so you see it touches here it goes, and now this point touches here again, and this is a very valid one, I should say. So let's zoom back in. Okay, so what we have here now is number 1, the trend line. Okay, number 2, the price pivot zone. Number 3, the 200 moving average. Number 4, the 61.8 fib retracement, and number 5, the pin bar. So with all this, I would say this is what we considered a pretty good A+ trade, and we should be looking for entries like this. Okay, but I would not enter straight away at this pin bar, because what we have down here is the 150 moving averages. Okay, so what I would do is I would place an entry limit right below the 150, somewhere over here. So when this point, when it hit the entry limit, it will trigger and off we go. Alright, so let me zoom down to the 4-hour chart for you to look in better detail. Okay, so what you can see, here's the bar that I highlighted. Okay, so what have we come so far is we have moved right down all the way throughout the way. And in our private group, that our Asia trading forex group, okay, so I have developed strategies among my years in trading, probably 14 years to date now. I have learned to trail my profits and cut my losses, Alright, so I believe this is an extremely important factor which all traders they must implement in their schedule. Okay, because you do not want to enter or exit a trade via emotion, which is what most traders would do, and eventually you will see their account depleting or eventually go burst. So how to be a successful trader will largely rely on money management and trading psychology. All this will be explained in full detail in our private training group. Okay, why did I put this private training group $99 a month commitment? Because I believe that forex trading should be like every business itself. We require a level of commitment. I'm not saying is bad putting it to be free. I'm not saying free is no good, but however, if I put it free, you guys may not even think that this is useful at all. These are all free stuff, and you will not be fully committed towards learning free stuff. I should say in this way, if you pay a little bit, I'm not charging, which I would do, charge 10 over thousands for courses, 3 days courses, which I have done so already. The reason why I'm now doing this now at $99 a month is because I really would like everyone to really learn forex the easy way. Alright, the easy way, but however the successful way. I believe those courses that run those 3 days courses would not be enough for you to be profitable. If they teach you a trick or two at those courses and they expect you to be profitable, I would say you must be a genius. Alright, with that being said, which is why I require a level of commitment from you guys. And every now and then through our private group, I will post daily charts for us to discuss. I'll post our trading strategies, and step by step, I will help you guys to improve on your game towards eventual success. Okay, which is why, okay, let's go back to this part now here, which is why I'm able to trail all this right now and not exiting through emotional, which I believe a lot of traders do. For example, when a trade you have entered have reached 50 pips, we say, wow, that's 50 pips, that's a very good thing, and probably I should exit now in case the trade goes back on me. So when they exit, poof, what happens? Or the trade moved down right all the way to 200 pips, and they will say, oh no, I should not have exited, how stupid am I? I believe most traders will have encountered this in a way or two through emotional trading, and they will feel really bad about this. And because of this, I also have experienced such a thing, and I have throughout my years I have developed a way to trim my profits and only let the market take me out, and let the market let me know how much profit should I eventually take. And how about losers? Some of you guys may have set stop loss at a certain level, but when the trade goes back, you think, oh no, this is just a temporary setback, it should go back into profit. So you shift your stop loss back even furthermore, and boom, what happens? The trade becomes a losing trade, and instead of losing just a little, you lose quite a big lump sum of your money. And what happens at the end of the day? All your hard-earned efforts that you have put in throughout all these months will be gone just because of one or two emotional trades. So this is what happened to most guys out there. Alright, I shall keep this video short because I need to post this on the blog itself, and I really hope to see you guys in the private group that we have set up, and all those traders and senior traders, seasoned traders, professional traders will all be there to discuss our trades. Alright guys, thank you, see you guys, thank you.